Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next 25 minutes here on Options Guide TV. Well, NVIDIA came out, and it looked like it was going to take over the world, and then decided, nah, I guess not. And now we're trading right back to almost where we started. Stock is at 136.41. It's down $2.78 today, or almost 2%. Now, I don't know about how you approach the trade. I did quite a few of the short put spreads that we talked about, using that capital to actually buy an out of the money call. Once we hit the 143 mark, and 140 was a very important area, and it went up to that area, hung out for a little bit, had some coffee, and then came back and closed at 139, which was overall a bad thing. I did sell out of my long calls, and I initially put my long calls in, and I had the 141s, not the 143s, for like $5.50, trying to steal a quarter. And of course, trying to steal that quarter cost me $1. So I ended up getting out at, instead of 5 1/4, which I was hoping to get, after I kind of saw some weakness coming into the stock, or at least perceived that it was happening. And then I closed it out for about $4.25. So I did sell the calls, and I did capture some of the gain in that scenario. I still have the puts on. I don't mind being put to stock, and I mentioned that more than once. So if I buy more shares of it below 135, I'm okay with it. But here's the trade that we set up on Wednesday in Options Guide TV. I mean, NVIDIA still has some room to run. Don't get me wrong. The only thing is that we have 7 days remaining to expiration now, and the fact that we couldn't close above 140 was annoying and bad overall. 140 is one of the more recent highs, and then we're going all the way back to 150. But NVIDIA did take over, being the most expensive capitalization in the marketplace once again. So a lot of good news in NVIDIA, but once again, the news cycle is, I don't know why I keep saying once again, but the news cycle is still just tough. It's hard to deal with on just solid companies like NVIDIA. It's hard to try to discern what exactly is happening once again with the trade war. So we have a position on where we've sold the 135, and we're long the 128. Let's share that screen right now. And we use that to buy the 143. The 143 is trading at 67 cents. If you don't think it's going to come back today, this isn't a bad time to get out, because you're still getting some time premium in the option contract. You're selling it for $1. We put the whole trade together for nothing. We received a small net credit to put the trade on. And let me look exactly what that price was when we initially put it on. We did it for exactly even. So by selling the 67 cent call option, if you were to do it today, if you didn't make any action yesterday, you're going to make that 67 cents. And at this point in time, though, you're a little bit more worried about the put option. It depends on if you want to buy the stock or not. But the 35 strike put is in play now. It didn't seem to be in play for a minute, but it wasn't. We didn't lose enough time premium to take it off after the initial run up. And I didn't care, because I still, once again, don't care if I buy the stock at 135. I still want to take a longer term position in NVIDIA. All right. And that was the speculative play. If you were willing to buy the stock, or you just wanted to get flat out bullish on NVIDIA, here's the second trade. And well, let me look at this one in the what if calculator. This is the way the profit and loss graph worked when we put the trade on. And now it's just using today's prices. So if you look at this, you have unlimited upside potential because you're long a call option. You just have to get up to the 143 strike. Between 143 and 135, which is the short put strike, not much goes on. Did the trade for, well, right now it's showing a small net credit, but we did it for even. Well, we could get out. That's not true. We could get out for 71 cents. So that's kind of what this is reflecting. And then on the way down, we have the risk all the way down to 128. Now, the front spread, and we talked about this, if you own stock, this trade was very interesting, and you know, it still would have helped you out. This is, we had 100 shares of stock, and we went and put the front spread on, and we received a net credit of $1.42 for that trade. So $1.42 or $142 per 100 shares that we had. And this is the way the front spread looks like when you set it up. I'll clear this out and I'll send this one to the ticket. It is now trading for 25 cents. So you could take it off for 25 cents if you wanted, but there's zero reason to do that, right? The only reason why you might take it off is that you wouldn't want your NVIDIA stock called away if over by June 13th, the stock rallied above 145. That would be the only reason to take that off. And the 145 strike call still has a little bit of premium in it. It's 121. I guess that's feasible. Let's go look at this. The 13th. Yeah, so we still got some juice in that. I don't want to take it off. If I didn't do this trade, I didn't do it on my extra shares of stock. I actually was intending to. I just never put it on. I was going to do it on at least 100 shares, if not 200. But if it gets to 145, that's where your risk is. So if you go back to the what if calculator, the risk is that you would get the stock called away. So this is the trade that we put on, brought in a net credit of $1.42. Basically, we're going to own NVIDIA on margin from 140 to 145. If I add the stock, then this is what your profit and loss graph would look like if you had 100 shares of stock. Now, it's not exact because we don't know the price that you bought the stock at, but bottom line is you see that the rise over run is 2 to 1 here on the way up. For every 1 point it goes up, you make 2. And that's implying that that's where we're at from 140 to 145. So we were hanging out right about here. We were doing pretty good. You could have sold your call. So, I don't mind doing that. Here's one of the things about this trade. If you put it on and realize that if the stock does finish between 140 and 145, you have to do something, or you're going to be buying another 100 shares of NVIDIA, right? Because if you land right at 143, you're going to be in the money on the 140 call that you own, and that's a good thing. But you're not going to be assigned on anything that's above 145. You're right in that no man's land. And if you have cash in your account, what most brokers will do is exercise on your behalf and buy the stock and use up your cash that's in your account. So if you're putting this trade on and the stock has came down, I expect a rally. We came up, we bounced, we finished at the 139. Once again, if we can close above the 140 level, that would be a good, that actually might just be a spot where you would buy long calls. But once again, the news, it's such a hard thing to trade because you're trading the news cycle as much as you're trading the fundamentals in the chart. And that makes it tough. All right. Do we have any questions on the NVIDIA trade? Did anybody do the trade? And if you did, you want to share, did you get out on Thursday? Like I did. I sold my long call. I just felt weakness in the stock. And it wasn't necessarily because I saw anything in the charts. You're just kind of seeing the way the stock is trading, listening to what's happening in the marketplace, and closed out. But NVIDIA's earnings brought a lot of the semiconductors for, up in general. Broadcom, just across the board, we saw increases in almost the entire semiconductor industry because their numbers were really good. Almost everything that they said, they even lowered the write-off for not selling chips to China. They lowered the potential hit that would happen because basically they said they could reuse the chips and reuse some of the parts and all that, so the hit wasn't going to be as big. All right, I don't see any comments or questions. So going into next week, I feel like the markets are tipping again, and the VIXs came back up, and it's around 19. And I looked at the earnings reports next week. We don't have anything too major that's happening. We have the two interesting ones to me a little bit. We have Dollar General that's going to be announcing on Tuesday before the open. And then we have Ollie's, which is, I live in North Carolina, well, just right on the border between North and South Carolina. And that's a very popular discount store, and they run a good business. So it's interesting to hear any comments that either of these could have. And then Dollar Tree is expected to announce on Wednesday before the open. That's what day of that week that is. I cut off the days of the week. So that would be Wednesday before the open. And Five Below is announcing, I don't know, nothing too really exciting. Yeah, Campbell Soup is announcing on Monday. That's always fun. What a great company that is. But so I'm just going to I'm going to do one of our SPX trades. I've actually had a couple of requests for it. In the messaging. So I appreciate that. And yeah, we haven't done an SPX trade since we got into earnings season. We're obviously on the tail end of earnings season. So let's go in and look at the SPX. And we're going to set up our bearish trade in the SPX. The VIX up a little bit. It shouldn't be too expensive. A couple $100 we're going to look to spend on one butterfly. And we're going to do the open wing butterfly to the downside. We're at this big round number at 5,900. We'll see if we finish above that. That wouldn't really be a good thing. I might put this on a little bit closer to the close, but I prefer to just get bearish a little bit heading into the weekend and at least by Monday. And I'm going to use the Wednesday options. You could go all the way to next week, but I'm going to use the Wednesday options. I'm going to put this trade on using Wednesday. So the expiration that we are going to use here is going to be Wednesday the 4th. So here we go. 3 days away. We are going to go a little bit out of the money. We're at 98. Okay, we'll do the 95s. We're going to buy this one. We'll try. Let's look at the 15-point run all the way down to 85. We'll hit that twice. Okay, come on. Froze for a second here. Okay. So that's 15, and then we'll go down 10. And we'll buy that. Yeah, 260. 255. Let's do that one right there. So this will be our official paper trade. We're going to look to go out to the June 3rd expiration. And I'm going to say 255. That's where I'm going to put the order in. And we're going to look to buy the 58.95 strike put, which we've already came down to that level. We're going to sell 2 of the 58.80 puts and buy 1 of the 58.70 puts. This is 15 points wide, and this is 10 points wide. That's going to open up the wing, and it's going to allow us to be profitable if the market goes down below 58.70. We're going to pay $255 for it. The maximum that it would trade for below the 58.70 strike would be $5. So you're looking $255 and possibly make 245 on the trade. If it lands somewhere in between the strikes, you can make more than that. The pretty straightforward in that scenario. So I'll send this to the what if calculator. And we're through earnings. We're going to lean a little bit bearish going into this weekend. And we'll see what the markets have for us. Okay, come on. Let's go to the what if calculator. I just want to show you that. And then we'll have a short and sweet options guide TV today. I mean, I think we had the right outlook on NVIDIA. And once again, I still think it's a very strong company. It's easy to get to make a bullish case for them. All right, so the market is right here, 58.93. Our open wing butterfly, we're going to buy something at the money. Well, I like to go just a little bit out of the money, but now the market's moved and we're a little bit in the money, actually. We're already making money. We're up a quarter on the trade, right? But if you put it right here, we're going to buy the 58.95. Maximum upside would be $1,208 on our trade, but that means that we'd go out right at expiration, right at the 58.80 level. We have until the close on Wednesday, so you got all day Monday, all day Tuesday, all day Wednesday for the market to close, for the market to go down. And if we go through this range here, below this strike, you see that we're quite a bit above the zero line. It's saying that we got it done for 285, and it's saying the max upside, you got to look right over here, is 215. But in our mind, we got it done for 255. The max upside would be 245, and that's the way that we're going to approach it. I would leave it in there at 255. It burned me on the NVIDIA long call where I tried to grab an extra quarter, and then I went back and looked at it, and I didn't fill. But this is where I would put it at. Yeah, I see the market jumping all around that $2.55 level. I think that you could get a fill at that. Any questions, concerns, thumbs up, thumbs down? Let me know. Go ahead and toss it right into that into the Q&A box, and I'll be happy to answer it. We'll come back on Monday for the next edition of Options Guide TV. I hope you have a nice, long, enjoyable weekend. Summer is here. Go out and have some fun. And we will see what happens over the weekend, see what the news cycle brings us. And we'll be back Monday morning to look at this trade at 11 a.m. Eastern time for the next edition of Options Guide TV inside the Tradier Hub. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.